Hi everyone, welcome to the class. So, in the last lecture we were we started with the international economic institutions, right. So, it is a very important time when I am standing here. You must all be aware of the coronavirus, which is now spreading up like wildfire. It has affected the China, not only China, but some of the other countries also slowly getting into it. And when such kind of an epidemic happens, right, we think only that lives are lost, but along with lives, the impact it makes on international trade and business is quite immense. For example, you see many of the products from China now have been stopped by many countries because of the fear, right, and the human resource movement is now stopped for the same reason, right. The importance of trade and business and how trade and businesses are linked with human beings is very important to understand. And when such kind of natural calamities or epidemics happen, as in this case this coronavirus, we can see that how much it impacts the entire economy for that particular country, right, the economic condition, right. So, in the last class we talked about the Bretton Woods agreement, in which 44 nations started the international monetary system, in which they wanted to make trade easier and simpler, right. So, this was during the Second World War time, and then this Bretton Woods agreement from this Bretton Woods system, but out in 1970s around it was demolished, it was stopped, it was closed, and in because the simple reason was that it was using a fixed rate system. The Bretton Woods agreement was following a fixed rate system, but when Nixon was the president of America, Richard Nixon, he wanted through his advisors, he wanted that it should be more of a floating rate system. And during the Bretton Woods system, it was in such a way it was done that the US dollar was pegged against the gold, right, and the other countries' currencies were pegged against the US currency. But then after the death of the Bretton Woods system, you can say, then came up two institutions, and one of them being the IMF, the International Monetary Fund, which we were discussing, and then the World Bank, right. So, the International Monetary Fund plays a very vital role in in managing the economies of the world. For example, what it does is basically it works like a facilitator, it works like a savior, help somebody to help. So, it understands the economy of every nations, at least its member countries, and tries to understand it better. So, whenever some economy is not doing well, so the IMF plays a very vital role. The IMF tries to understand what is the problem, and then it also provides a solution. The solution can be in terms of like, for example, first identifying the problem, then it could be like providing support, lending support to the concerned country, and then also followed with policy making and advice, right. So, this helps, and we have seen some examples in the last class we discussed, for example, the case of Vietnam, the case of Ireland, where these economies came up from a very bad situation, and Vietnam became one of the most open economies and developed countries among the Asian economies, at least, right. So, we will continue from there. So, the IMF's two roles we had discussed, one of them was the surveillance role, and the second role was the role of lending, right. And the IMF, we discussed that it lends to the countries on basis of the quota, right, and the quota is decided on basis of the voting power of the country. That means, how much it impacts the global economy, accordingly it has a voting power, right. So, and on basis of that it decides the quota, right. So, third point which we will discuss today is capacity development. So, the third function of the IMF is the capacity development. So, what it says, the IMF provides technical assistance and training to help member countries build better economic institutions and strengthen related human capacity. So, for example, you see, designing and implementing more effective policies for taxation and administration, okay. Expenditure management. So, as you saw, if you recall, in case of many of the 2008 crisis that happened, many of the countries, at least the countries in the European most of the countries were affected, largely the European countries, USA and all. So, what happened was there was a very bad management, I would say very poor or bad management of funds, right. Credits were given without any proper checking and everything. So, this all resulted in a condition where the economy crashed. Okay. So, expenditure management, monetary and exchange rate policies, right. So, what is the monetary policy? What kind of monetary policy should a government have, the central bank have? What is the exchange rate policy, right. So, banking and financial system supervision, so structural reforms we are talking about in the last lecture. So, the structural reforms, how should the banks be working? In some cases banks need to be merged, right, in order to reduce the number of unnecessary workforce and unnecessary cost of the bank, to make it more lean and operational. So, legislative frameworks and economic statistics. So, the capacity development is that part where the IMF helps the countries to train their people to understand the economic to build better economic institutions, right. This also includes to reduce inequality, gender equality and climate action, because you see the IMF, although it is the financially, it has a large influence on the finance, but it looks at a holistic or overall growth of any nation, right. So, it through not only from the economic, for the economic development, it also looks at stability of a country also, right, and the policies. So, strengthening economic policies through capacity development helps increase the understanding of IMF policy advice in the country, keeps institutions up to date on global innovations and risks, and helps address crisis related challenges and spillovers. So, if there has been any crisis in the recent, for example, the crisis could have been because of a war like situation, could have become because suddenly of a change in the governance structure or a policy, for example, as we said, trade investment mechanisms, trade related. So, if a country has just moved into a new policy, trade policy, so maybe it will have a loss for a short term period. So, in such conditions, how you should operate? Similarly, the IMF surveillance and lending work may identify areas in which the capacity development activities can have the biggest impact in a country. So, what are the priority areas the IMF tries to find out? Training is administered both in person and online. The IMF has significantly scaled up online learning as a vehicle to deliver training to the government officials. Okay. Online courses are also being made freely available to the public through MOOCs, as this course for example, since the program's launch in 2013. More than 17,300 government officials have successfully completed online courses. So, this is something the roles that the IMF does. So, we will talk about a case of Mongolia today. So, what happened in Mongolia? Improving tax collection. So, tax revenue in Mongolia is highly concentrated, right. Some 400 large enterprises account for about 50 to 60% of the total domestic revenue. This is what has happened. Among these large enterprises, about 100 large mining companies account for 40% of the tax revenue. So, there are total 400, let us say, large ones which account for 50 to 60% of the total domestic revenue. Among these 400, 100 contribute about 40%. So, reflecting the importance of the mining sector. Many of these large businesses are also the country's largest investors. It was in this context that in 2010, the Mongolian authorities requested IMF's assistance in helping the government design a strategy to improve the performance of its tax administration. Now, what happened? What was the impact? So, the IMF intervened due to the request of Mongolia. The IMF supported reforms helped improve large taxpayer administration. So, large number of people were brought into the tax bracket. The largest portion of tax revenue was brought under effective control. A high rate of on time tax return filing was achieved, nearly 100%, that is exemplary, right, very great, with all tax returns filed electronically, right. Tax, and when you do it electronically, you need to have trained people for that also, right. Tax arrears were sharply reduced, taxpayers expressed a high degree of satisfaction with the reforms. So, all this led to a very effective condition, a very good positive condition for Mongolian tax structure, right, and finance for them. The IMF is accountable to its member country governments, right, at the top of its organizational structure. So, now we will talk about the governance, what is the structure of the IMF, right. So, when you talk about the IMF structure, at the top is the board of governors, right, consisting of one governor and one alternate governor from each member country. Usually they are the top officials from the central bank or finance ministry. Okay. At the present, the current managing director and chairman of IMF is the Bulgarian economist Kristalina Georgieva, right, who has held this post since October 2019, just a few months now. And Geeta Gopinath happens to be the chief economist of the IMF since October 2018, right. And if you remember the recently Geeta Gopinath's statement regarding the credit rating and economic condition of India was also largely discussed very recently. The board of governors meets once a year at the IMF World Bank annual meetings. There are 24 governors, right, in the board of governors there are 24. So, 24 of the governors serve on the International Monetary and Financial Committee, which advises the IMF's executive board on the supervision and management of the IMF system, right. The day to day work of the IMF is seen by its 24 member executive board, which represents the entire membership and supported by the IMF staff, right. This is how it looks like. So, there are this managing director is the head of the IMF and chair of the executive board and is assisted by 4 deputy managing directors. So, this is how it looks like, so right. Just I can tell you, you can go through it, right. So, there are the different member countries. So, they advise the board of governors IMFC, right, the executive board, managing director, staff. So, they are interconnected and the countries authorities they also have representation. While the board of governors has delegated most of its powers to the IMF executive board, now the board of governors has given most of its power to the IMF's executive board now. So, the executive board looks into the day to day operations, but it retains the right to approve the quota increases. So, the quota is to be increased or not, that is still kept, this function is by the board of governors. The special drawing right allocations and admittance of new members, compulsory withdrawal of members and amendments to the articles of the agreement and bylaws. So, some of these activities are still managed by the board of governors, but otherwise the other operations are completely delegated to the IMF's executive board, right. The next important institution which was an outcome from the the Bretton Woods system was the World Bank, right. So, one was the IMF, the other was the World Bank. So, what is this World Bank? So, like a bank we can understand it is like a bank, right. So, it must be giving some funding, some loan. The international organization dedicated to provide finance, advice and research to developing nations to aid their economic advancement is the function or the role of the World Bank, right. It is an international organization which provides finance, advice and research. The World Bank is an international financial institution that provides financial and technical assistance to, right, to the developing countries. So, you must have heard develop several World Bank programs for let us say cleanliness, for improving hygiene, for reducing let us say pollution, for cleaning rivers, so many different kind of activities. The World Bank was created at the end of the World War II, as I have mentioned, as a result of the it was an outcome from the Bretton Woods conference we have already system we have discussed. The bank is successful in providing financing for this devastated or destroyed countries. The first goal of the World Bank is to end extreme poverty. It wants no more than 3% of people to live on $1.9 a day or less by 2030. So, that is the the goal or vision. Its second goal is to promote shared prosperity, not a skewed prosperity, that only a few countries are very rich and others are very poor, or a few people, like for example, in India a few families hold almost a large portion of the GDP, right, the wealth. It wants to improve the incomes of the bottom 40% of the population in each country. Since 1947, the World Bank has funded more than 12,000 projects. Okay, that's a, be it infrastructural projects, it be anything, as I said. So, the World Bank group, under it there are several organizations. We can see it comprises two institutions. The World Bank itself constitutes of two institutions, the International Bank for Reconstruction and Development, IBRD, this one, and the International Development Association, this one, right. So, the IBRD was founded in 1946, IDA was founded in 1960. In contrast, the World Bank group comprises three more institutes. For example, the International Finance Corporation, this one, 56, Multilateral Investment Guarantee Agency, MIGA, 1988, and International Center for Settlement of Investment Disputes, right, 1966. So, the entire World Bank group has 5 major institutions, right, again within it. So, let us see the IBRD first one. The International Bank for Reconstruction and Development lends to the governments of middle income and credit worthy low income countries, right. It is the original World Bank institution. It works closely with the rest of the World Bank group to help developing countries reduce poverty, promote economic growth and build prosperity. So, as the name itself says, Bank for Reconstruction and Development. So, it is largely funds tries to help those countries which have which are going through some difficult times. The second is the IDA, which provides interest free loans called credits and grants to the governments of the poorest countries, right. So, this bank provides loans to those poor countries. IDA complements the World Bank's original lending arm, the IBRD. The IBRD and IDA together share the same staff and headquarters and evaluate projects with the same rigorous standards. Okay. But only the interest area slightly varies, right, in between them. So, this is more on the providing the loans. The third is the IFC. This is the largest global development institution focused exclusively on the private sector. So, what it says, the International Finance Corporation is the largest global development institution focused exclusively on the private sector. It helps developing countries to achieve sustainable growth by financing investment, mobilizing capital in international financial markets and providing advisory services to business and governments, right. So, these are the first three. Then the fourth and fifth. The fourth fourth institution under the World Bank group is the MIGA. So, the Multilateral Investment Guarantee Agency, created in 88, was done to promote FDI investment into the developing countries, right, to support economic growth, because every country might not have a large amount of reserve with it to develop infrastructure, everything, right. So, many a times we need FDI investments from outside. So, if for example, poor countries would like to keep their reserves for better utilization like school, medical, road, everything. So, in order to provide a, let us say, a plant or a factory or something, you need foreign investment, some direct investment. So, this MIGA helps in promoting the FDI into the developing countries to support the economic growth, reduce poverty and improve people's lives. It fulfills the mandate by offering political risk insurance, right, and credit enhancement products to investors and lenders, right. So, the MIGA helps in offering political risk insurance, right. The last one is the International Center for Settlement of Investment Disputes. So, investment related disputes, right. So, this provides international facilities for conciliation and arbitration of investment disputes. So, this body helps in try to settle any kind of investment related disputes among the member nations, right, or the parties, the different parties, right. So, this is a fact file of the World Bank. So, July 44 it came into existence. So, that these are different things, headquartered in Washington DC. So, these are the members, official language used is here. The president at the moment is David Malpass and parent organization is obviously this. The first president was Eugene Mayer. To become a member of the bank under the IBRD articles of agreement, a country must first join the IMF. This is important. So, in order to become a member of the bank, you must first join the IMF. Membership in IDA, IFC and MIGA are conditional on membership in the IBRD. So, so these are the some of the facts related to the World Bank, right. What are its functions? Now, let us talk more about its functions in detail. So, the major functions are, first, it granting reconstruction loans to war devastated countries. So, IBRD for example, the name itself says reconstruction, right. So, when it helps in providing loans to war devastated countries, for example, some of the African nations, some of the nations like Afghanistan, Pakistan, Syria. So, all this granting developmental loans to underdeveloped countries, providing loans to governments for agriculture, irrigation, power, transport, water supply, education, health, etc. It provides loan to private concerns for specified projects. So, for some specified projects also they provide loans to private concerns also. Foreign investment they promote by guaranteeing loans provided by other organizations. So, they what they do basically, so they promote foreign investment by guaranteeing loans, right. They act as a guarantor, right. Then provide technical, economic and monetary advice to the member countries. Encourage industrial development of underdeveloped countries by promoting economic reform. So, some of the major functions of the World Bank are these. Okay. The bank's stated purpose is to bridge the economic divide between the poor and the rich countries. So, the major objective of the World Bank is to bridge the gap. So, there is a huge gap between some of the African countries and let us say some of the European countries. So, now to bridge this gap is the major purpose. It does this by turning rich country resources into poor country growth, right. It has a long term vision to achieve sustainable poverty reduction. So, the bank focuses on 6 areas largely to achieve these goals: overcome poverty by spurring growth especially in Africa, help reconstruct countries emerging from war, the biggest cause of extreme poverty, right. So, we have seen after a war what happens, right, people do not get food, there is malnutrition, children dying of hunger. So, to help this reconstruct such countries. So, provide a customized solution to help middle income countries remain out of poverty. So, to help some solution so that the middle income countries they would not come into this poverty problem. Spur the governments to prevent climate change. So, yes, one of the major job that the World Bank is helping in is to prevent climate change, right, which is today we have we are talking a lot about global warming, climate change. So, it is working a lot on it. It helps them control communicable diseases. So, today only when I started the lecture I started with the coronavirus, right. So, it helps, the World Bank helps comes into it, plays a major role. So, it helps in controlling the communicable diseases, especially HIV, AIDS, malaria. So, there are a lot of programs on malaria, lot of funding being done for scientific fund research and development. It also manages international financial crisis and promotes free trade. Work with the Arab League on 3 goals. They are to improve education, build infra and provide micro loans to small businesses, and shares its expertise with the developing countries, publicize its knowledge via reports and its interactive online database. Let us talk about one such example. So, one case which is from Kenya. So, this is the LED Kenya project, right. So, what was the role of World Bank? Let us see. So, the objective of the Kenya Local Economic Development Project, LED, Local Economic Development, is to strengthen local business and the business enabling environment in communities impacted by oil, gas, mining and infrastructure investments in Kenya. The project will cover 3 components, right. Component 1, local content development. So, what is local content development? Enhance opportunities for local businesses to participate in the supply chain of multinational firms by improving access to information along with improving local firm capacity to meet standards and international requirements. So, basically we have seen because of lack of information or lack of data, many a times people are not able to take advantage. So, it helps in giving access to information, right. Second, local economic development, support the creation of diverse market opportunities and improve the competitiveness of the local business to access new markets such as agricultural, livestock value chains or renewable energy. This will include a focus on supporting women and youth entrepreneurship, capacity building and facilitating the access to finance with local financial institutions, right. The third component of this is the institutional capacity building. So, first one content, economic development, third one capacity building. Work to promote a sustainable and conducive environment for private sector development. So, a country cannot always be run by the government, right. So, the private sector also has to develop the country. So, this will include among other support with the development of strategies for Baishara centers, training of trainers, to localize the training capacity, enhancement of corporate governance of local boards and advisory councils. The project will focus on empowering gender balanced participation in the structure and activities of the governance of these communities, right. So, this is another program of the World Bank, empowering women and girls to transform the Sahel, right. So, you can go through this. This was one more program and there is one more I have given an example. You can read, providing on the job skills for urban youth in Papua New Guinea. So, the World Bank helped, how they helped in improving the condition of the people out there, and this was a project in Rajasthan. In 2004 in India, the 41 billion Prime Minister Gramin Yojana, Sadak Yojana program has benefited 3,23,000 habitations across India by building new roads and upgrading old ones. The World Bank supported the program with a total loan of $1,800 million and another 500 million has been approved, right. So far 36,000 kilometers of road have been completed under the World Bank Finance Rural Project scheme, right, and have opened for traffic. These roads almost connect 50,000 habitations. So, these are some of the very inspiring and very good works done by the World Bank across the world. So, largely in those countries where the need is very high. What is the organizational structure of the World Bank now? So, the World Bank the member countries govern the World Bank group through the board of governors and the board of executive directors, like the IMF we have seen, right. So, there is one governor and one alternate governor appointed by each member country. The office is usually held by the country's Ministry of Finance, governor of its central bank or a senior official of similar rank, right. They are appointed for a 5-year period and can be reappointed. All powers of the bank are vested in the board of governors, the bank's senior decision making body, according to the articles of agreement. The executive directors make up the board of directors of the World Bank. They normally meet at least twice a week to oversee the bank's business, including approval of loans and guarantees, new policies, the budget, country assistance strategies, what kind of assistance is required for a particular country, they will discuss about it, and borrowing and financial decisions. Each executive director appoints an alternative executive director who has full power to act for him or her when he or she is not present. In her or his absence, the alternate director will work. The current board of the World Group consists of 25 directors. In line with the bank's articles, the executive director selects the World Bank president, who is the chairman of the board of directors. The president is the presiding officer and ordinarily has no vote except a deciding vote in case of a equally divided board. If they are equal, then the deciding vote is given by him. The voting power of each member country is based on the number of shares it holds. Shares are allocated differently in each organization, resulting in different voting powers. Okay. So, this is, I think this is the most recent one, the January 11, 2020, the organizational chart, how it looks like, right. So, the board of governors, executive directors, the president David Malpass, and then you have different organizations and their different members. So, you can, if you go if you look at it, you will get a better idea and detail. So, this is the most recent one, right. Now let us talk about a few of the agencies and what is their importance. Now, what have they how they have contributed. For example, the IBRD, right, which one of the World Bank groups, the IBRD top country borrowers have been largely countries like India, Indonesia, Jordan, Egypt and Argentina, right. So, followed by China, Morocco. So, these are the commitments 3024, 1950 until Colombia. How much disbursement they have done by from 2015 to 19 fiscal? in millions of dollars. So, you can see Africa 816, 874, 427 up to 690, and East Asia and Pacific, this is the value. So, it has been so this are something in total, if you see in 15 they in 19,012 billion dollars, in 16 22,532 million dollars, then it goes on. So, these are some of the disbursements done by the IBRD for the reconstruction and development purpose, right. Some of the sectors in which they have committed are basically agriculture, fishing, forestry, education, energy, financial sector, health, industry, services, information and telecommunications, public administration, social protection, transportation, water sanitation and waste management. So, these are some of the areas, and each the values are accordingly in each sector. It has been given. This table might be very helpful to you. So, you can go through it and understand where the focus has been largely there and in which year which sector they have largely focused, that you can see, right. IDA on the other hand, the IDA's top country borrowers have been again Ethiopia, Bangladesh, Pakistan, right. So, this one provides loan, right, we have seen credits, Mozambique, Mali, and in terms of value it is 15 was 12,905 millions of dollars, and in 19 it was 17,549 million of dollars, right. And the commitments by the sector in fiscal 2015 to 19, it has been in different, again you can see this fishing same thing. So, how it has differed you can see. So, this is all the commitments in terms of revenue this different organizations under the World Bank group they have done, right. So, largely today we have understood that the World Bank and the IMF, the major purpose is to look at not only the financial and economic health, but also to look into the social health of a country, right, to bring the country into stability, to ensure that each that the member countries, they do not they do not fall into trap of financial debt or economic debt, a kind of a trap or kind of a problem, or if there is a structural issue which comes up. So, in any kind of condition they help in capacity development, they give loans, they provide assistance, they provide they try to do kind of a surveillance and try to understand which countries are going through what kind of conditions. So, they also talk about the ratings of some countries, for example, the IMF talks about the rating. So, recently the India for example, India's rating was brought down, and that created not a very good thing for India, because when the IMF cuts down the rating, or suppose the rating comes down, so maybe investors would look at it with a different view, right, not a very positive view. So, all these things are very important, and today we have discussed with it. So, I think this is all we have for the day, and we will wind up here, right. So, thank you very much. I hope you have understood the role of economic institutions, international economic institutions, and how they shape the world, right. So, thank you very much.